Yeah, good one. Good ones. I don't scalp. I don't. Right then. But we get rid of all this because I don't want it on there. Let's move this over as well. Let's just check what's going on here. Let's just check that it's all good. Clear. Make sure that's there. Let's get some testing going on. Let's so this is live. If you can hear me, then type open a web browser. So that's open in web browser. Ugh, okay, got to open that in web browser. Everything I've got to do in web browser. It's annoying. Where are we? Oh, there we go. YouTube live. Okay, so we are live. If you can hear me, testing. If you can hear me, please just put a message in the chat. Alright, let's have a look at this. Testing. See if that comes up. Okay, cool. Okay, it did come through. It takes a while to come through, but that's okay. Fantastic. Right, how do we get this on here? Do we do that? Right, so he can, let me just do copy. Let's just make sure that, I think this is the yeah, that might be the link, I hope. No, that might not be the link. I don't know. Let's delete that. Wrong thing. Just setting up. Right, should be good. Should be good to go. So make sure that's all good. All right, thanks guys for putting the reply in. Okay, that's all good. Oh, no, stop. No, go back there. Oh, this is annoying. Right, let's get that on there like that. It's always a hassle getting set up. Haven't used it for such a long time. So I checked it yesterday, checked it again today, just making sure it was all updated. I thought it was all good, and then hello. Let me just type in everyone. Right, good. I just want to do one more thing. Just want to make sure the link. Right, so I'm doing that. Okay, and then I'm doing that. High importance. That's a good one. I like that. High importance. Yeah, good. Making a nice list. No 1 minute scalps. Yes, it's funny. Let me see if this is actually going to work, where I can share this link. So I don't want to share this link. Oh, here we go. So go here. This is what I want. No, I don't want to click on it. All I want it, I don't want to see it. Oh dear, oh dear. Painful. Get off, go away, thank you. Right, all I want is options. Can we see some oh, there we go. Save to playlist. No, I don't want to save to playlist. I want to share the link. Add to queue. No, okay. I guess it's just the website then, isn't it? I thought there was a potential, I can't remember how we did it now, but anyway, I thought it was just a case of putting it on and job done with a link. Alright, we are live. Good. Right, good. We're on. We'll start. We'll take note of that. Ah, nice one, mate. Yeah. Ah, nice. Okay, good. What's this? What's this? What's this? Wicked. Nice one. Nice one. Perfect. Perfect. Thank you. Cheers, bud. Good. That's all good. That's all done. All right. Hello. This is funny. I like this. Right. We can start with let's build the technical analysis from the beginning. And the example I'm going to use is the $CAD, because the $CAD set up and the $CAD had a nice setup. So let me just make sure that that's done there. Make sure that the world knows that we're live, and so they just, don't want to get involved. They can go there, and the link is that, so is I haven't done this for a while, so I've forgotten how it was all setting up, or whether it was going to work or not, but it seems to be working. Alright, that's all done, and we will start in about 2 seconds. So just put this on YouTube. Alright, sweet, done. Alright, let's get that out the way. Let's close that. Let's close things down so I don't need to have too much stuff on. Zoom out the chart or zoom in. Well, hello everyone. Hello. Hey, some names I haven't seen for a while. It's nice to see everybody. I haven't seen you guys for a while. Hey Sophie. Nice to see you. Pav, I wasn't sure. You were messaging me and you were talking about some stuff, asking me some questions about doing something, and I was thinking, you do realise we're going live? No. So you're talking about a video on this, but how about fib levels? It's always about fib levels. Everybody always wants to know about fibs. They work. Learn how to use them, and they'll save your life. or save you from near-death experience. Because it'll stop you from having a heart attack when the trade goes against you and you don't know what you're doing and you're thinking, why did I do that? So yeah, let's have a look at this. So I'm going to go to let's do it in a traditional way. This is how I would analyze the market. Start from top to bottom, top down analysis. What do we mean top down analysis? So I'm looking at the dollar CAD, so I've chosen my instrument. I've gone as high as we can go with the, on here at least, monthly. Okay, monthly time frame. So start plotting your fibs on the absolute highs and lows, finding where they are. You can clearly see there's my high, there's my low, and this is going back. It doesn't matter when it was, you know, I'm not looking at the time, but just out of interest, I'll look at the time and I think, okay, Feb '02, we topped out, and then we spent 5 years going down, November 2007. So nice, 5 years worth of selling. Interesting. And then we had some nice movement. We pretty much retraced 50%, and then we stuck around, consolidated in that range for a period of 1, 2, 3, 4, 5, 6, 7, about 7 months. Yeah, best part, you know, good chunk of the year. And then it went down and retested. And so what do I do here? I want to explore these ranges. So every time it makes a new peak or a new low, and more so when it doesn't make a low, I'm interested, because this is where we can then start to apply the Elliott wave principle. So we start with the top-down analysis and we start to drill down. Before we do that, we make sure we mark up the charts going back historically, because if you have a better, fuller picture of the journey and where prices come from, then it's going to potentially help you, because especially with forex pairs, price just goes up and down, doesn't it? And historically it just retests levels that have already been tested. It may take a number of years, but that's the way the markets move. So all we're doing is we're just trying to time an entry to go long or to go short and make some money on it, and that's pretty much it. So then we say, well, how do we go about doing that? And so then this is how I set about doing that for myself. So here I plot the, plotting the fibs helps me carve up the range and the journey that this takes, then the price action, and does it stall at the 50? Well, around the 50 kind of starts wicking and messing about. I mean, appreciate that this is a 5-year journey, and the magnitude of this move is huge, and so for it to be pinpoint accurate, sometimes it won't be when it's this large, but when we draw down to the smaller time frames and we are seeing precision, that fills me within, that encourages me to get involved in the trade. So that's good. That's why I use the fibs. When it's the high time frames, it's just a case of just getting a picture of what's going on. So let's look at that. I was looking for a 764. No, it didn't do it. It did, well, it didn't do it. It reacted off there. You can see a slight reaction, then it dropped and made a new low, and then it found some traction and went up. So okay, that's cool. Don't need that on there anymore because that's all done. What we do is always go left to right. You notice when I plot my fibs, always from left to right. So on that occasion there, it's from top left to right. What I'm looking for now is what happened when price broke the structure, when it broke the previous high. Where's it extending to? I'm looking to see if it's going to extend up to anywhere significant in terms of fib extensions. And also I'm looking at these fib extensions, these key numbers, to see if they overlap and tie in with any other, like the main fibs of the bigger picture. Not quite, but you can see it sort of wicks up, and then the following month, March 2016, we did react off the 127, and you can sort of see that there, and it dropped. That's quite nice. But bigger picture for me, and what I really like as well, is that 764. We wicked up into it, so it was around 145, and we wicked up into there, and then we fell off, so it tapped out. So it did make a high, didn't it? Did it? It didn't test the high. It stalled at the 764, and that's what we look for. Dollar CAD's good for it. It likes the fib numbers. It does work quite well. 19 people's good. 19 people's all right. That's fine. If we, if I can get 20 people to, as opposed to one person, it's good. 20 people talk to you guys for an hour or so, answer your questions. Hopefully you'll find some value in it, and yeah, job done. So yeah, so there's a 764 set up, tapped out. So what I can do here is every time the market goes up and takes out one of these fibs, you can remove it. you know, just take it off, because what we're trying to do then is not clutter up your chart, and you're not trying to confuse things where some people tend to leave these fibs on and it's quite static and it goes up and it drops back and they say, oh, I'm going to target the 38.2. And I'm like, what 38.2 are you talking about? And they'll say, oh, this 38.2. It's like, what are you talking about? No, that's not how we trade. That's now done. It's obsolete. You don't trade it back down to the 38. You reverse it. It's not relevant. So get rid of that, just so it doesn't confuse you. You can leave the 50 on for reference, maybe, just to show where price went up to. Did it go to the 618? Didn't really go to the 618. Where did it top out? At the 764. So you can, again, just go and remove it. We're going to drill down. I'm going to go into what it's currently doing, because there's some good setups currently in play as well. Structure on the left, additional confluence. Yeah, it's confluence, isn't it? It's all confluences. The more confluences you can justify, and where they align and where things overlap and interlock, the better, right? It makes sense for it to do that. So you want at least 3 confluences, and they can vary, just depends. But primary, for me, the primary confluence. So I need something to take priority, something to act as, to represent the leading authority. The primary confluence in this case, therefore, are my fibs. They're more precise generally than anything else out there, and we've got workable strategies that we've constructed from these levels, because we see reactions. So look, I'll show you this, for example. I haven't checked this. I thought I'd wait for you guys, but there's 2 ways to do this. I'm going to look for a 382 pullback up here, and I just want to see if it did that. And I'll say there's 2 ways, because there's 2 lows here that we can take, because it's such a massive move. What I've done is I've taken it from the low point here where it started. This move started here, which you can clearly see. And so this is the part. Let me just do that again. This is the part where people tend to, for whatever reason, they forget to do this part here. So they, it's always from left to right. So left, we plot it there to there. The fibs will mark themselves, so mark up on the chart for themselves. You don't need to worry about that. You just take your fib tool and just go. In this case, it's bottom left because it's left. So I'm starting here. It's the left point. So what happens when I start dragging it? Well, that creates 100%. So where's my 0 point? Because I'm looking for the retracement. So the 0 point, just remember 0%. That's your starting point, isn't it? That's going to drop 38.2. So if you short it there with a 764 strategy, from a monthly point of view, so position trading like the banks do, where they take positions and they leave them on. If it takes 3 months to get there, so be it. What's nice about that, and in answer to the question someone just asked, potential 83, I like that. Check for structure to the left. Yeah, so with with signs of divergence, where the markets are going to snap back. So when they break out of a previous high or low, so here there's the breakout. It paused for a moment, pulled back, and it said, no, we're going. And then it pulled back, and then it shot through, and it extended beautifully, and pretty much to the 764 ran at area, slightly above. That's quite impressive, considering this is a monthly time frame, and we're looking at a 5-year range. That's pretty on point. So I quite like that. And so yeah, if you were shorting 1, 2, 3, about four months worth of selling. What would that have given you? That would have given you 4 months, 2,000 pips. So I mean, it's the dollar CAD. It's can be quite steady, quite slow. But that's what banks do. That's the difference, right? If they were selling here, shorting this peak, shorting all this liquidity, grabbing up here, and looking to sell it back down, then that's what they would do. And they say, okay, let's take it back to, say, the previous structure, for example. Let's take it back to here. When it gets down to about here, we'll just take some profit off the table. That could be the play. There's no time constraints, because it's not their money, is it? It's the bank's money. It's investors' money. So they take your money, in effect. They've got hundreds of millions, and they'll say, right, we're going to sell here. We're going to short it here, and we're going to cash out down here somewhere, for argument's sake. Previous structure, for argument's sake. Or they might just leave a position on, and they might be looking to get it all the way down to a 50%. Let's take it across a little bit more. Let's see what it's doing here. What was it doing in 2016? So that was your T1, and then what was the retracement like? Was it a 50% retracement? Let's just have a look at that, because I'm thinking it did maybe a 50% retrace. So again, we're measuring the next part of the journey. So we measure every range, every high low. We want to measure it. We want to put it under the microscope, and we want to evaluate and just work out the journey. What's it been doing? Where's it going to? Where's it likely to top out? So then it does a 50 pullback. This is clever, because this is called 50-50, or 50 to 50. It could have been 38 to 38, 61 to 61, 764 to 764 is my strategy in effect, and that is maximizing the entire, or the bulk of the move. But quite simply here, if I just add on this range, most of you will already have gotten wind and know exactly what I'm looking at here. But yeah, you can see that this wicked down to the 50%, pretty much on point. And again, not bad in terms of massive range of moves. For it to do that as accurately as that, you can argue there's some wicks here, some candles here, previous structure. That's cool. That's an added confluence then, isn't it? That's nice. So you have this move. It does the T1, and then what does it do? It retraces 50% there, pulls back. Could probably measure that part of the move as well. Probably find that that's, I don't know, 38, 40%, I don't know. Goes up. I'm not going to go into it in too much detail, but yeah, look, we get here and then it drops, and that's quite nice. It does one more little retest, slightly nudges up liquidity, takes out any stops if anyone's trying to short, fake out, that whole kind of concept. Go up here and then failed, and then as it failed here this month, that's nice. This is all happening in slow motion. So if you would sell there, where would you put your stop loss? Well, once you get a confirmation like this, then it's worth watching. It's worth watching the 3-step approach video that I made this week, because that pretty much answers the question on how I enter the trade. 3-step approach to managing my entry and risk, and that's we're waiting for key areas. So if you were to short here, for example. You get in here, then the stop just goes behind. The stop just goes there, because what we're saying is that this is where it's going to turn and go down. If it doesn't and it decides to go up, you get taken out, but that's okay. You're there trading at the key level. I mean, this is on a monthly time frame. What I would do if I was trading on an hour chart intraday, day trading, I'm ideally looking for this to have the stamina to at least go up to the 764. Get up to that 764, and then I would apply. Say this happened up there. Then yeah, let it test it like this, maybe a little wick up. Then as it starts to reverse, enter and put my stop just behind, and then start looking for T1 and T2. Now, in terms of a T1 and a T2, let me just put the fibs on this fully so we've got it. T1 and T2, to keep it simple, T1 is just to take some money off the table. So I, quench that thirst, those emotions, the greed. You're doing that. You're feeding yourself. Take some profit off, and it's also allowing you to move and manage your risk, move your stop loss to break even. That's part of the 3-step approach. Watch that video; it's broken down into it. So then that's how we manage the trade once we're in it. And watch this when we do this. So you get the pullback, and then let's see, does it extend to 127 as well? You see what I did there? Again, fibs. Take it from the left to the right. Whenever you're plotting anything, left to right. This one, top left, bottom right. This one, bottom left, top right. But it's always left. Whatever point, there's the high, there's the low. I'm dragging it across because I want to see how price reacted on this sell-off. It was a clean sell-off. It paused at the previous structure, didn't it? Paused there, but then it just spiked down, broke out, did a nice little extension, 127 extension, so 127. So it broke the 100% and extended. What do we have down there? Around 121, round number 121. Nice. What else? 50%. Nice. 3 confluences straight from the off. 50% of the bigger range. A 127 on the pullback, and 121 as a round number. That's 3 confluences. That's it. It's that simple in terms of confluences. I'm not looking for anything I'm not looking for anything complicated. There's no rocket science behind it. It's just price action, but it's knowing where price is likely to react, and if it does react, then you know whether to get in or get out. And that's what the fibs are helping us to do. Noah, hello mate, how you doing? Good to see you. So so that's price action. So the 50 to 50. What do I mean by that? Well, it retraced 50%. Thereabouts. So then I'm thinking, if it stalls here at the 50, I'm thinking that this is going to go down. Not only is it going to retest at 38.2, but it's also going to extend, and I'm going to target the 50 because it retraced 50%. Had this pulled back, it's like an elastic band. If you go into your drawer in your kitchen or in your room, wherever you have some drawers, and you open it up and you get your elastic band out. I said this to some of my one-to-one traders the other day. Physically get something that's tangible, something you can touch, to give you a realistic kind of concept, because the problem with trading is that we're looking at everything online on a screen, and you can't physically touch it and feel it, and sometimes we are desensitized by this whole game, if you like, and what happens there is, you sometimes forget yourself and forget the whole risk, and it's like, hopefully this is being recorded. Hopefully it is going to record, or it is recording. I don't know. Is it recording? Yeah, hopefully it is. We'll see. If it's not, it's not. We'll do the next one. No problem. But yeah, so 50%, I think, right, it's going to extend down to the 50%. So it's like an elastic band. Had this gone up to, say, the 618 or the 764, the higher it goes, the more tension there is in that pullback. And so when it gets up to around this area, we start exploring an Elliott wave bit of price action, where we've had the whole first move down, puts in a marker, then it starts slowly, like it went down hard, didn't it? And then it grinds up really gradually. That's a good sign. If you get a sudden move like that, that's the first bit of liquidity. Who's doing that? That's the banks. The banks have come in and they're putting their risk on the table. They are the first to do so. They take all the risk. They put the money on. They make the move happen. A move like that, that's great. Then what proceeds? What you're looking for is a bit of a retracement. So the markets are breathing back in, and this is great, because what you're looking at is, if you're like me, you're not going to chase this. What happens with most traders? They chase it, get down here somewhere and start selling here, and then it goes up against them and they lose, because they haven't got a clue what they're doing and there's no strategy. So here what we do is you allow it does that, and then it does this on a retrace, and it starts grinding back up. That's cool. Let's be patient. Let's see where we can get to. Ideally, the higher the retracement, the deeper the retracement. This is what I call I've coined it the 3 option rule. So first option being that it's going to retrace within these fibs to one of these levels. The higher, the better, the more tension there is in that elastic band. So it's going to snap back, and it's going to snap back hard. So the way I see price action a lot of the time is, if it retraces 38.2, then I'm looking for it to go down at least 38.2. But in this case, it already hit that one, so that's great. So the next logical fib would be the 50, then the next one would be the 618, and then the 764. So in this case, it pulled back about 50%. So I thought, okay, I can target 50%. And then, like I did there, I applied the fibs and the extensions, and always from left to right, and pull them across. See where the extended levels are. If it breaks out, you could take some money off here. That's cool. Previous structure, or somewhere around this 38.2 to be safe, and then leave something on. And if it stretches down, you grab yourself another. What was that? Another 500-600 pips. It's not bad. But anyway, so that's all done. So what do we do now? Well, that's all done. So let's scrap that. Let's get rid of that. Let's plot some fresh fibs. Remember, fibs are dynamic. They're not static. You don't just put them in one direction, one way, and expect it to, to be it. If you're trying to short the market, remember the 0% needs to be at the top. If you're trying to go long, the 100% needs to be at the bottom. Sorry, the 0% needs to be at the bottom if you're going long. If you haven't done that, it means you haven't plotted them right, or you haven't plotted the new set of fibs. Let's put some more on here, because I want to get, this all stuff that everybody knows already. It's all basic, but there's some here that haven't really maybe taken time to learn any of this, but don't expect to digest it all. I want to move on to where we're at right now, because I'm going through top to bottom, top down analysis. I'm still on the monthly. This is still the same pair, dollar CAD, and I've just moved along. Now we're at 2017. We started at 2002. We've had the new low. That's done. We had a new high put in. When you go back through your charts, you only need to go back to March 2020. You know what happened March 2020, pandemic. You'll see massive price action, massive volume, something like this across the board. Just there's a massive reaction, whatever pair. So that's always a good starting point. So potentially you don't need to worry about what's gone on there. You don't need to worry about the bigger picture there. Keep them on for reference because that was nice and it's great. But what we're interested in really is what's price doing here, where we had this beautiful move up March 2020, and then what proceeded to happen was a nice sell-off right down to 120, and that was a 50% again. So testing again this key area, and then it bounced. So let's fast forward. Let's go here. Let's have a look. Looking at the retracement, seeing if we can get that 50. So I've got my fibs on this part of the move because this is 2020. Let's drill down. Let's drill down into it now. Let's go into like a weekly. You can see that last move was quite nice. Nice reaction. I'm going to keep that on. I'm going to remove. You can see I've already removed the 38.2 because it's no longer necessary to have it on there. I'm going to remove the 50 as well. So just untick the 50. Because you can see price came down into the 618 area and then it found some traction and slowly started to grind back up, and then it even went as high as making a new high. And it's edging ever closer to that 130 as a 382 retracement. Ever so slight, just missed it. So yeah, interesting. Let's go down to a daily. Let's explore what's been going on here, because we've had a couple of weeks of upbeat movement. It's been very strong. And then if you had this in your watch list, you would have seen that the dollar CAD, dollar strength has pretty much exhausted as of sort of today, end of the month. Dollar's been very strong. It's been going up, retesting the highs. If you look at the dollar basket, dollar index, the Dixie, there's dollar strength. All the dollar pairs, dollar strength, massive strength. So coming up here to previous structure. Someone's asking about structure. Yeah, you can see, look, where prices come up, tested this area. And then I'm expecting it to react here. I've got 764 here, so that's cool. So what do we do now? Well, this is the next part of the journey. So you need to have fresh fibs on this. Let's explore this, because this was an Elliott wave move. I'm looking at it and I can tell you it's an Elliott wave move right there on this move up without really having to plot anything. I'll keep it on a daily time frame and I'll show you what I mean. So to get up to here, if you were long, this would have been your target. Your T1 would have been a 382. That was nice. Your T2 is there. Watch what happens. So we have the first impulsive move, and then you get 764 pullback. Pretty much on the money. When it does that as accurately as it does here right now, that fills me with confidence. That is a confluence in itself. For me, this is what I am looking for. I'm long from here. This is me wanting to get in long. So anywhere around just below 125, let's go. Let's go, and it pumps up. So you have first move up, wave 1. Wave 2 is down to about the 764. Nice pullback, strong pullback. Cleared everything out here. Took out all the stops, sell off, liquidity, resets. Beautiful. Makes a higher low. What else can you do here? You can add things like your trend line, just for reference more than anything. Because as with any form of support and resistance, I'm interested to see how it comes back down to test this for a third time, and then on the third test, will it break or will it hold? The third test is always a key. But yeah, there's Elliott wave 1, wave 2. So you want to get in on the wave 3, because the wave 3 is the money. The wave 3 is the longest wave, it's the biggest move. Because what's happened really, what it's done is it's gone up first move. Again, banks coming in, driving the price up, buying it, and then it stalls a bit, and then you get all the retail traders coming along late to the party, and it starts faffing about, and then it drops on them and they get stopped out or whatever. Anything's happening here in terms of liquidity. The bulls and the bears are having their the whole thing going on, but eventually this is going to find some traction, and I'm betting my money more often than not every time that it's going to find traction down here at 76.4. You can even look left and say, look, previous structure. Again, we talk about structure, and it makes sense, as a secondary confluence. So I use it all, but just be clear, I have to put things into some sort of order. So I've often referred to like a movie where you have the actors and you have the lead actor, and then you have the rest of the crew, the rest of the cast. They all provide a supporting role, but the lead is, in this case, the fibs. So they're primary. Everything else provides a secondary supporting role. Even if you didn't use the fibs, you've got everything else, and it all works. But I just find, in terms of giving me that extra edge, that edge above maybe most traders, by applying these fibs, that just gives us another level. It just takes the whole thing to another level. It just kind of finishes off perhaps what you're missing. So you've got this toolbox filled with these things that you use to to trade with, but confluences. They're all confluences, support and resistance in different confluences. So you've got EMAs, you've got your pivots, you've got your trend lines. So trend lines, pivots. Let's put the pivots on. Oh, you can't put them on the 4 hour, on a daily for some reason. I don't know, trading view's weird. But yeah, EMAs. I use an 8, 21, 50 and a 200. Exponential moving averages, they move fast, quite nice. I don't have them on here, I have them on my other charts because I don't want to clutter up trading view, because I want to leave it clear because I use it for illustrative purposes. But yeah, so you've got this support here, you can see where price is coming down and getting stuck, and then it does it again for a third time. 3 times, whatever the confluences you use. The third one is always interesting, because the third one you're looking for it to react. So it reacted there, so that's alright, you're not late. Hopefully this will record. If it doesn't, no worries. So it's covering basics at the minute, but we're going to go into a bit more detail now. So Elliott wave movement. This is great. Elliott wave is fantastic, because Elliott wave comprises of using fibs and knowing what part of the journey you're in with the price action, which I really like. Let's go here like that. Let's turn it off. There we go. So wave 1, wave 2, wave 3 is going to be, this is again how you plot your fibs. It's always from left to right, so you have to be dynamic. They're not static. You don't just do it one way and then trying to make it. It doesn't work that way. So Noah, pay attention. Left to right, mate. Left to right. So from top left this time, because you're dragging it down. What happens when we drag it? Watch. As we start dragging it down, the fib extensions that I already have them preset, they start to appear, don't they? And they start to project to the upside in this case. Because as I expand this and open it up, it's a bit like a fan. You open it up and it fans out beautifully. So there you go, wave 3. So where's my wave 3 target? Well, wave 3 is the biggest wave. That's your money there, because you've had the pullback. So it allows you plenty of time to get in for a decent entry, because you're in the mix. But you're banking on the fact that this is a 764 strategy. So you're going to start getting in here with a pinpoint accurate entry. And this is what we do time and time and time again. So, seeing something like this playing out, this is the day, the next day we have this move start to develop, and you're counting on the fact that this is going to, it's going to take off from the 764. Where would my first target be? Well, realistically, I'm maybe looking at around 126, somewhere like that, maybe 126.20. Why? Because we're staying in the mix, we're staying in this range, and we're not, we're not taking anything for granted. And I'm saying, okay, this has all the clear signs that this is going to give us an Elliott wave 3, and it's the biggest move, and this just pumps. Because like I was trying to explain before, what happens here? Well, what's happened is it's come back to test the lows, and it's a do or die moment. It's the third time, really, and it's either going to then break, it's going to answer the question. And it's a simple closed question. It's a yes or no response. By this time, there's nothing else left to say. It's a yes or no. Is this going to sell off? Yes or no? No? Great. Well, we're going up then. And that's what you're looking for. It's that final confluence, if you like, the final, confirmation. That's what confluences are. It's another fancy word for confirmation. You're looking for confirmations. You want to be sure. You're never 100% sure, but that's okay. Watch my video, my 3-step approach. How do I manage the trade? How do I get in? Well, we're looking for an entry down here somewhere. So then the stop loss, where does the stop loss go? Someone asked me about the stop. This is all I do. Wherever it wicks down, wherever the price stops, that's it. Pretty much there. That's where my stop's going to be. So in terms of risk to reward, the beautiful thing about the 764 strategy is it has all the makings generally of an Elliott wave move sometimes, where we have this kind of move up, pull back, and Elliott wave 3, which could potentially give you a huge risk to reward. I mean, I know for a lot of people that looks really cool and it sounds great, and you'll get these all the time. It's a never-ending buffet. The problem's not with the analysis. The problem's not with marking it up. The problem's not with me teaching this stuff to you and working with the one-to-one guys. The problem is you get in the way. You are your own worst enemy. We know Elliott wave 3, biggest move. I'll tell you, 161 area. That's the target. Oh look, what else do we have? A 764. Great. That's the target. It looks great. If I gave this setup and we got in here at the perfect trade, perfect entry, and I gave this to 10 traders, how many do you think would have held one of these, held something, a runner, for like, I don't know, 400 pips? I'm guessing maybe one, maybe. That's probably me. Anyone else? I don't, So the issue doesn't lie with the information. We can learn to trade and know how to trade and know what we're supposed to do the right thing, etc. But there's a lot of baggage with some of you. You come to this game, but you bring your whole life with you. Oh, I need to pay the bills. Oh, I haven't got any money. Oh, I'm quit my job. Oh, it could be something serious like, family, someone's ill in the family, I've got to pay their medical bills. It could be anything. It's just precious. But you're bringing that with you, and of course it's going to affect your decision-making process. When we're emotional, we can't make logical decisions. It's going to affect our judgment. So, this is the process. This is what I like to work on more so than anything else with my one-to-one guys. It's about working on the process, having a process you can believe in, and by having that process that you follow, it will help reduce your emotional thinking, because you're a bit more trading on autopilot, like a robot, like an algorithm, and so then you're not having to overthink. As soon as you start overthinking, step away from the screen, step away from the charts. If you've lost some money, step away, whatever. Just get away, go and reset. Just give yourself let yourself, your head clear. You just need to let yourself take a few deep breaths, take a knee, relax, gather yourself, and then come back, start again. It's a bit like an audition. You're going on like Britain's Got Talent or America's Got Talent, and you're going to go and stand in front of the judges, and you're going to perform, aren't you? And it's all just a bit nerve-wracking. You're on stage, but you've got this. You once you learn the process, once you know. Always hashtag that. Once you know. So you've got something as a foundation. You have a process you can believe in. If you don't have a process that's tried and tested and that you can believe in, then this is the work that I do. This is what I've been doing for the last couple of years. And if you haven't yet gotten on board to understand how I trade and understand it is using everything that you guys use, it's just different terminology, I think, sometimes. People talking about smart money, order blocks, and accumulation, distribution. It's just supply and demand. It's all the same. It's just we coin it differently, and I tend to lead everything using fibs because they're just providing a bit more pinpoint accuracy, because it's a line as opposed to a box. Like, this is a box, it's a zone. If I have to put a stop loss round here somewhere, then I'm like, okay, I'm going to put a stop loss where? Under here? Get wicked out? Where am I putting my stop loss? It's all if, but, maybe, around, about. So this provides a secondary confluence. It's great, but it's not accurate enough for me. I don't want to get stopped out 2 or 3 times before I make money. That's not how I want to do it. These other concepts, they're aggressive, and they get in risk 1%, lose. Have another go, risk 1%, lose. Have another go, risk 1%, lose. How many times? And then I finally get there. I don't know, what does that do to your mentality, to your emotions? How do you feel after losing 2 or 3 times? Me, I'm going to feel like every other person. I'm only human. I'm going to feel on tilt. I'm going to be feeling like I need to revenge trade. And that just kills accounts. Overtrading kills accounts. Blink of an eye, I'm down 5%. What? When did that happen? How? What? You know, the kettle's not even boiled. I haven't even made a cup of tea yet, and I've lost 5%. You know, so things can get away from you just like that, and it's not a nice feeling. We want to avoid all of that, so we need to have a process. I'm not saying my process is the only process, but it's a process, and it's the one that I go with. So if people want to ask me questions about stuff that's not what I do, then you can. But you know, again, it's all secondary confluences for me. It's all secondary. You know, someone's going to say, well, is this right? Is this good? What do you think to that? I'm like, well, it's not how I trade. So I can give you some sort of feedback. But what I have to do is try and just focus on what works, what I know works, and focus on that and sharing what I feel will work for you. And so it's almost like plug and play, straight out the box. It's ready to go. All you have to do is plug it in, start using it. You know, park what you think you know to one side for a month, fully immerse yourself in the way that we do it, and do it, and try it, and see if you pick up a few tips and pointers. You know, what percentage to your original trade would you leave as a run out? Oh well, I want to take at least 0.5% off. So half of my position off, 50%. What's really cool is if I was to get in here and say we did get in and it all worked perfectly and it was all great, and you know, we'll drill down to the smaller time frames like a 15-minute, 5-minute. We'll look at hourly time frames as well for the close of the hour. So let's go down into this, and I'll give you exactly what I would do. And I know it's after the fact, but I was just going through this. I saw this, and straight away it all made sense, and without me having to plot anything. And I just thought, oh, we can use this because it works, makes sense, and it's nice to see it all in action. But when we trade, I trade live, and we are putting trades on every day, and I'll document it in exactly the same way I'm doing now. So it's easy for you to learn because I'm documenting the same process. I'm doing the same thing. Repetition is key here, isn't it? New habits being formed. Once you have those habits, they're there for life. That's it. So 764. Yeah, but you're using this pullback. Okay, but what we need to always talk about is the bigger picture. Every time it makes these little pullbacks, that's all very well. So you have it like this, for example, and I can see that's the 764 pullback of this range, and that's nice, you know. So it might make a higher low. That's what that means. When you start putting the fibs within each part of the range, what happens here is it might find some support here and go up and retrace, and we can explore that in a moment. I wouldn't waste a 4-hour chart on that though necessarily. Maybe I'd go down to an hour maybe. But yeah, I want to maybe take some money off. When you get a bit more savvy with this and you understand what you're doing, go in small, put 0.5% risk on, then build the position. If it starts taking off like this and you start looking at a 4-hour and a 1 hour, this is what I'll do. Let's add some money. So I've got 0.5% on and split into 2 positions. You know, we see that on the 4-hour it's starting to cross over with the volume. So this is a volume indicator. It's great, and it crosses over, and that's a confluence. That's another confluence. This is a massive confluence. Indicators, anything that gives you, that shows you divergence, anything that helps you show volume when price is overbought, oversold. You know, there are different ones: stochastics, RSIs, MACDs. They all work. Just have to know how to use them, or use them. A lot of people have them on their charts. They don't use them. It's quite funny. So why'd you have it? I don't know. It's just there. So okay, what? It's generic. Yeah, it was just there. But don't use it. Not really. Okay. Yeah, that's quite funny. It's like, well, what's the point? So let's get it on. Let's get it. Let's use it. It's a tool. It can be used. T1, something like that would be great, because then you're looking at structure. You're looking for it to break. If it breaks out, we've got the Elliott wave 3. So I want to leave a runner on. But also, as it starts to pump up down here, we might have to drill down to a smaller time frame still to just to look, because I'm thinking I've got 0.5% on. If this is good, I want to have something on, and I want to leave it for what's that? Where's the 764? And the 161's at 128.10. This is 128.30. 128.10 to 40. So anywhere around 128, anywhere at 128 or above. I mean, you'd be happy to take it off around 128, wouldn't you? Really, even if it goes up another 10, 20, 30 pips to catch like a 400 pip move, which we have done it many a time with the pound yen, and we've all gotten involved. You can do it a little bit. You can do a little bit less. You can be. This is why I scale in with extra positions, because I'm thinking this journey, is it going to go straight in a line like this, straight up, clean, or is it going to take, I don't know, is it going to take 2 weeks to get there? And for me, that's a factor to consider. So as a day trader, it might go up. If I was to get a move like this, yeah, I want to take some off. Maybe take some off at the 38.2 of this range as well, because the 38 and the 764 are my key fibs. The significance of them are huge. The 38.2 is what I use as a confluence for my MT strategy. So we don't talk about it very much, but it's not a strategy that I use to enter a trade. It's a strategy that I use to stay in the trade that I'm already in. My divergence, so if it was oversold in this case, or my 764, which we are using here, are the two strategies that I use for entry. And I think everybody gets to that point when they're learning with me that they understand the entry and they can 764 all day long, because it's quite a common setup. Price action respects it a lot and does this, the higher low in this case, it happens. But they're a bit lost after that. It's like, so you work so hard to get the perfect approach, the three-step approach to managing your entry and your risk. You get all that right, and then you start adding to a winning position. That's about as far as they get with it. Now what? Their next step is, I need to bank some, I need to take some off. And they end up closing it all and snatching profit, because they haven't really thought out the rest of the journey, or they don't really believe in this whole process that it's going to actually get as high as here. And so there are things that you need to work on. Self-development. That's why I always talk about the 80-20 principle. 80% of your trading should be you putting into practice scenarios. 20% should be trading. So it's 20% quality. Like Pav said, quality, not quantity. So put a trade on, let it run. Leave something to run. Let it breathe. Stop suffocating it. Leave it alone. Step away. Stop touching it. Get off. It's like, you are a nightmare. You are your own worst enemy. You're always messing with things. You can mess with the whole process. You can take profit along the way, but leave something on just to make you feel better, if nothing more. To say, yeah, I've done it well. I made some money. I squeezed extra bit of money out of it. It was great, lovely. Okay, so what have we got? 128, 124, 50 was the stop. Something like that maybe, or was it 128.60? When it goes up, so all I'm doing every time, I'm just playing defense. I don't care about anything else. I play defense. So what does that mean? Well, I just want to get my stop loss managed to break even as quickly as I can, really. So any scenario where price pushes up like that, sorry, yeah. I was messaging somebody, didn't know if they were here or not. But yeah, anyway, there we go. Oh, you are watching. Oh, excellent. Cool. All right, good. I just thought of you now. I thought, oh, this, I'm talking about the process here. Oh, okay, cool. I didn't want you to miss it. So yeah, 764, we get to that. 764 of this one. Their process, manage it, drill down. Let's go down. Let's quickly get down, because it seems to be taking too long. Sorry for rambling on, but it takes an hour to explain something that you can probably think of doing in like a minute or two. It is like that, isn't it? You come in, you see the setup, you start mapping it. Job done. Denver, Haley. Hello to America. Hello to the Americans here. Good morning, by the way. So So you get in, you need to drill down, start looking at the smaller time frames, because you want to see price react at this key area, and it does, and it is. And I remember this as well. I remember this, and I was talking to one of my traders who was looking at going long here, and I said, yeah, this is good. If it takes off, what you can do is use that 38.2. That's what I was going to say. The 38.2 of this range. With the MT strategy, 1 hour MT strategy, you're looking for price to cross over the zero line, so volume to start turning bullish and positive. At the same time, you want to be seeing this test the 38.2 of whatever the smaller range is. And that is the MT strategy. That is the purpose of the importance of it. It's an integral part of my trading. I want to see the screws turn in my favor. I want to see things turn favorably, and there's a number of things that I'm looking for. So okay, 764 or divergence, they provide the perfect pinpoint entry like this. Great. So we're getting in, we start seeing price go up, start changing the structure a little bit, get in there, or you get in here a little bit later. That just means your stop loss is going to be slightly bigger. Who cares? You're targeting maybe taking some off at the 382, but with the fact that this is the volumes, it's decreasing, it's moving exactly how we want it to do. And I'm looking at this on a 1 hour chart, because 1 hour is integral. I need to see things like this where things confirm. Like here, we tried to go down and it put in a little retest. What sort of a retest is that? Straight away, whenever I see things like this happen, where price does that little reaction, I can go into my 5-minute chart, for example, and I can go and scrutinize that. What do I mean? Well, I'm looking to see if it did a little 764 pullback, for example. And people say, what, even on that? And I was like, yeah, definitely on such a small time frame, on such a small part of the move. I don't know that it's going to develop into something like this just yet, but certainly I want to examine what it's doing, because I know that it's going to take a while. So when we start anything, any project, when we start anything in this world, it takes a bit of time to get started. It's the same with a trade. Often markets just need time. Like it starts to flatten out here and consolidate. It just takes time to build that momentum. So that's what we're looking for, though, the momentum to shift. So you can start to really scrutinize every aspect of it, because you're scaling in and you're putting some money on this. So you want to see, what is price going to do? What sort of a pullback are we going to get? Is it going to take out the low? You're looking for a higher low. I think it probably pulled back about 50%. I'll do that. I will drill into it and just see what's going on. And once it's pulled back, what does that mean I can do? Well, if I want to be very proactive, which I am anyway, what does that mean for me? If I'm in here thinking that this is going to break, then I can do this. I can tuck my stop up, which is what I do anyway. So straight away, I've just halved my risk, for example. That makes me feel so good. If I'm going to risk, if you're trading with a prop firm and you've got hundreds of thousands of dollars and you're trading with massive money, and every move is like equivalent, I don't know, $1,000 or something, the last thing you want to do is leave a stop loss, leave it just flapping in the wind and think, oh, I'm going to lose 10k on this move if I just leave it. No, I want to be proactive. I want to protect that money. So we're playing defense. If it doesn't work and it starts to piss around and it comes back down, so be it. It wasn't meant to be. But I know that I am getting in at a proven level because it's my 764 strategy. So for peace of mind and in terms of a confluence, the strategy in itself is the confluence. It is a confluence. I've built it from the ground up, working behind the scenes. It's got all the moving parts, and we've put it together to formulate this one strategy that is high probability, and it works, and that is your edge. That's what you've got. You just take it out the box, you plug it in, and you start making it work. You obviously you tweak it, and it's moving parts like this. It's alive. It's a living thing, this market, and it's pulling back like this. So I think, okay, it goes up now. I'm in. Okay, I'm going to tuck my stop. I'm going to just tuck it in behind that part. And that's what the small time frames are for. They help me see what's going on here. This is important. So that's what smaller time frames are for. But I don't want to be blinkered like a horse. I don't want to have be narrow-minded or narrow vision. I want to capture that Elliott Wave 3 move. I want to capture this move. If I have to hold it for a couple of days or a week or two, that's cool. We do that. And we do it all the time, and we get good at doing that. And then, you do it a couple of years, you've smashed it. These risk to rewards, you only need a couple of these trades a month, because people always talk to me so much about risk to reward, risk to reward, risk to reward, and it's like, yeah, I get it, but play defense, protect your stop, protect your risk. Once you see it making that move and it breaks out, look, the structure's here, head and shoulders, even pattern in terms of another confluence. There's your low, there's the left shoulder, right shoulder, inverted head and shoulders, pulled back one final time. Again, closed question, you ask yourself, yes or no? Is this going to sell off? No. Okay, cool. Let's go. Let's add some money to it. As it starts pumping up, breaking out, I might add another position here, for example. Thinking 125, round number. Yeah, I want to add at 125. And then let's see if we can get up to like 125.40 for 40 pips to 38. And of course, let's go back up to the 1 hour, 4 round daily. Let's look at what price is doing there. And, with the view of seeing it all switch, momentum, switch, the momentum strategy coming in. Let's see if that can cross over. There's two main rules, two parts to the momentum strategy, MT strategy. It's cross over the zero line on at least a 1 hour time frame. Perfect. And break of the 38.2 of whatever the range is. So sometimes the range is bigger or smaller, that depends, but 38.2 is where I'm looking to see if it can break. In this case, it broke. We crossed over, volume's coming in, lots of fresh volume. It's the start of the move. It's the start. It's well, look, it's been brewing. It's almost like this is the earth, this is the land, this is what's going on underneath, under your feet, which it's getting ready. It's behind the scenes. It's prepping. This is giving you a sneak behind the curtain. You're seeing what's going on behind. This is what the Awesome Oscillator is about. That's why it's called Awesome Oscillator. I mean, what a great name. It is awesome. This Awesome Oscillator has made me so much money just from the simple fact that it just tells me. We call it the storyteller. On my software here, it's called a storyteller. It's telling you the story. The story is quite simple. There's only two stories. Is it bullish? Is it bearish? With trading, you overthink things. What you need to do, you need to be a bit more closed off. You need to be asking closed questions, not open questions. So what are open questions? Well, that's what your brain does. It's on all day, all night. It never goes off unless you meditate or you learn how to turn it off and put it on standby for an hour, half hour, whatever. That everyone needs, because sleep is not enough. Because if your brain is on, it disrupts your sleep anyway. So that's what your brain does. It's open. It's always on. Open questions are being asked all the time. What you need to do with trading, you need to close it off. You need to ask closed questions. So you need to look at what's going on here. Is it going to sell off? Inverted head and shoulders. What confluences have I got here? 764. Great. That's my primary. What else have we got? Okay, price is rejecting. It's starting to go up. Good. Great. Okay. What number are we at? What level are we at? Oh, 125. Okay, cool. If it breaks 125, I'm going to take it long. A couple of confluences. 2-3 confluences there. It's not rocket science. That's it, done. What's going on with my MT strategy? MT's kicking in. That's another confluence. Okay, brilliant. 1 hour time frame, yeah, it's valid, because I want the time frames to be high, because I'm looking at the bigger range. That's the only reason why we use the time frames, just to help us see price action. But when I look to plot fibs and look at the ranges, it's the range, it's not the time frame. People say, should I look at that on a 1 hour? So it's up to you. You can look at it on a 1 hour, 4 hour, whatever, just as long as you can see the range. And so there, it does it. It breaks. It goes. Right, good. Let's go. Let's hold something. Let's take some off maybe here. We'll add a few fresh positions, build a position. Let's have 1% risk maybe from a 0.5%. But I dip my toe in the water with 0.5% first. That's my starting point. My risk is managed. If you go in with 2% from the off, and it doesn't quite work, and you get stopped, you're already down. 1% risk doesn't work. You time your entry. You didn't get the perfect feel. You're already going to be down. You're already going to be feeling it. Just don't do that to yourself. Ask yourself some closed questions. Yes or no is a closed question. Something that you're going to be able to answer yourself. You've got to be tough on yourself in that respect. Is this going long? It looks pretty good. Yes, I say it is. Right, commit to it. Let's get involved. Go. You have to be aggressive in that respect and do it. It goes up, great. Then you start managing it. So I'll take some off here, maybe take some off here, definitely. 764, yeah, that's cool. Blew through, fantastic. Exceeding expectations. What do I do now? Let's trail the stop loss. So I probably need to go down to, I don't know, a 1 hour, 15 minutes, something smaller, wherever we have price stalling, pulling back. Let's micromanage the stop. Let's move it up. Let's lock in the profit on any remaining position. Let's not just leave it like that. Nothing is static in this business. If a market is going up or down, you're going up and down with it. You're not just sitting there static, are you? It's not how you trade. So it does that. I mean, I might just do something like that. But also, if prices come up to here, I need to use my fibs again and apply my 3 option rule. So we go like this. 3 option rule. Where's it gone to? Oh, okay, it's hit my target. Is it stalling? Oh no, it's stalling there, is it? Is it stalling there? Let's just clear this up a little bit. Let's just drag it that way. Ah, trading views, shocking. Okay, cool. Right, where's the 38.2? Okay, cool. Price is there as well. We've got some structure there. Okay, I'm going to move my stop. This is all variables now. There's no right or wrong way of doing this part. This is down to you as a trader. You give 10 people a set of instructions, you get different results, and this is why. Did they take some off? Did they close it fully? What was their entry? What was their risk? These all change. For me, try and keep the risks the same, consistent, so you get the consistent results. In terms of 1 to 1, 1 to 2, I'm not putting emphasis on the risk to reward. The reward's good generally. If you're getting a good fill and a good entry, your risk is quite small in terms of stop loss. Your reward can be pretty decent. It can build. We trade gold quite a lot because gold always gives us about 50 pips. Even a reactive move, a reaction on average, you look at it, it's about 50 or so pips. So I can manage my stop. I can take some profit off. I can do the things that I need to do with my trade because it's given me 50 pips as breathing space. And sometimes you find that the 38.2, like yesterday, I shorted it. I made a mistake first off, but the second part, 87, shorted it. What was my target? 81.5. That full move then was 65 pips. So if I'm getting about 40 to 50 pips out of that, perfect. That's what you're looking for. So again, you have to consider what you're trading. If the daily range on what you're trading is likely to be 70 pips, then don't expect it to move 50 pips straight away for you. Just have those considerations and be mindful of what it is you're doing. But certainly here, I'm going to move my stop up. I'm going to try my stop, and I'm basically gonna be watching to see what it does. If it breaks like this, then I'm gonna basically go up to. I'm gonna keep trailing it up. I'm gonna keep doing this, keep moving it, keep managing the trade. This is what you should be doing. How many of you trail your stop losses? You probably all put your hand up and say, "Yeah, I trail my stop loss." Or most of you could say, "Yeah, I trail my stop loss." But let's ask you a question. Let's ask you in a different way. How many of you actually do it? You might think that you do it, but how many actually do it? How many don't just close it down full position and then say, "Oh, I should have left something on." That's the difference. When the markets do trend, they don't trend 5 days a week, but they do trend at least once a week. You'll get a decent move. If you're on that move, that's your money right there, and you're going to make some money on it. If you've ended up closing that position, that's on you. If you get a poor risk to reward ratio, you're not making much money, and you're only making 0.5% here and there, scraps. It's because something's not quite right. There's little parts to this. This is my job. This is my job. This is what I've created for myself. It's a burden. I am. I've taken it upon myself to help people with this, to connect the dots, to fill in the blanks. So you come in with all the best intentions in the world, and whatever happens day to day, it's never 2 days. There are never 2 days the same, are there? And you never know what to expect, what's going to happen. Your mindset will play a big part. So if you have a process you can believe in, that's really, really important, because then you can always refer back to that. If things are not working, the wheels are falling off today, you're having a bad day, don't worry about it. It's a never-ending buffet, and there's an opportunity around the corner, and it's all good. We can have a look. Have a look tomorrow. Have a look another day. That's what I'm here for, to connect the dots. So when you are making a mistake, don't dig yourself into a hole. Don't dig yourself a grave. that you can't get out of, if you feel like it's you know, difficult, put your stop to entry. You try to stop with 3-option rule. Yeah, you do. Give it a chance. You know, I think like you've just said, some of you move your stop loss too soon, trail your stop too early. Yeah, it happens. So you know, allow it to move, allow it to break some key confluences. But we can always talk about that. We can. That's what we're here to do. It's you know, little things like that. It's not easy, right? It's not easy. So we are going to get differing results. One of those things. You're going to manage that trade. How are you going to manage that trade? Well, okay, put it this way. I've given you some tools. So I've given you a strategy, for example. I've given you some good strategies. They help with the entry. No drama. You know, that's hard work in itself, a process to get the right entry, get the right amount of risk, the stop, everything. Once that's all done, what's the next part? The next part is managing the trade. So that's the next part of the journey. You know, it's never a walk in the park, is it? It's nice when it just works. And it does just work some days. It's textbook. Everything's clean. It's lovely. I would not have reached your second target as a previous dip would have taken out my trailing stop. Okay. So maybe don't forget to keep looking at the higher time frames. You know, don't just look at the smaller time frames. You know, if you're watching a 1 minute chart, then you've basically plugged in to give yourself a heart attack, because every time it moves up a bit, down a bit, up a bit, down a bit, up a bit, down a bit, you're exhausted. It's exhausting. Use the small time frames just to really see what's going on with at a certain level, but don't stare at the small time frames. Just step away, zoom out a little bit, just allow it to do its thing. You know, it's going to go. If it moves in a straight line, that's a gift, that's a blessing. That's what we all kind of secretly hope for. But don't think that the markets are just going to go like that in a straight line. They don't always do that, do they? They're going to do some of this, more like. This is nice. You know, if you're in this trade still and you're looking for this 161 extension, you get this final pullback, then yeah, pull your, you know, tuck your stop into there. That's a clear area, isn't it? What's that? 126.78. So let's maybe put it at 126.80. I might even go so far as to, because it's pushed up, I might just go to 127, round number. You know, again, variables. What I choose to do there is, it differs, right? I'm just thinking, I want to squeeze as much profit. I've allowed it to drop out. It's pulled back. Now it's shot up again, breaking structure, going up. And it's fast approaching. It's going to be maybe one final push up, one final push. Okay, let's plot some fibs on here, fib extensions, so we take from the left. Drag it down. Let's measure this. Let's see what sort of price action we get. Let's see where the extensions are, just to see if it does make a difference. I know what I'm looking for. I'm looking for 128. Not far off, really. It just needs one more little push. I mean, you could probably go so far as to take some off. I might even take some off there. You never know. And yeah, on the 1 hour chart you might get stopped, so change it then. Just be mindful of what's going on. It's variables that are making a difference, but what you try and do is, I think first off, just move your stop to break even. If it does that, breaks the 382 and starts going up nicely and it gets to the 764, you know, great, it's done. You've done what you wanted to do. It's done what you wanted. It could drop back from here because it's set previous structure. It could, couldn't it? It could drop back from here. But as an Elliott wave moved, there's a chance now that it's actually done a really good move up, and then wave 3 is going to be quite strong and it's going to maintain a bullish trend. As it gets to exhaustion, you start to see it do this. This is the kind of stuff that you tend to see, and it's at the right level. So we had then a 764. We had let's go to 1 hour. What's going on with 1 hour? Did we have divergence? Yeah, we had divergence strategy. So let's just clear this up. You know where we're at right now. Gold just done a little flick back, because that's what gold does. I'm watching it. I've got it on my other screen. Wouldn't call that a melt. I'll just call that a correction. Little reaction off 1920. We've got 382 there. But yeah, so let's go there like that. Get rid of that. Don't need that. Get rid of that. 764. Don't need that. Once they're done. Again, remember guys, plot your fibs fresh, all fresh fibs all the time. When it blows through a level, that's it. You know, you're not keeping it, it's not 100% up and then you're going to short it here at the 100% and then sell it back to the 764. That's not how you trade these fibs. That's not how you do it. I see people do that all the time. You know, they keep the 764 and it's like, oh, it's going back to the 764. You know, if it dropped back here, it's like, No, 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 no. There's no 764 there. It's like, no, there is. It's like, no, there was. Past tense. Okay, past tense. Done. Back to that 764. No, no, no. That's no longer valid. This is past tense. This was just purely there on this range to help you with your entry. And it gave you a perfect entry, head and shoulders, pull back, off we go. Great. Okay, happy days. Now what? Okay, shorting 764. What are we looking for? 764, T1's 38.2. So again, talking about not overthinking things. Psychology, previous structure, divergence, previous structures here. You know, let's pull that up. Let's get this one over here. Like that. Let's do that. Because I know you guys will have highlighted this on your charts, no doubt. You know, you'll be looking at where price is likely to come up. It's quite nice, isn't it? It comes up into that zone. What else do we have there? 129 round number. Did it get up there? Didn't quite manage it. 764. What blew past the 764? What, it consolidated. So I mean, you could have been watching this and stalking it and just waiting, in anticipation that this was likely to sell off and drop. And why? Because you're going to be watching the dollar index. Why are you watching the dollar index? Because the dollar index is the dollar basket. That's the one that's important. You know, the rest of it, when it comes to trading dollar pairs, don't just look at dollar CAD. Look at oil. Look at the correlation with oil. Look at the dollar index. You know, correlation's a confluence. That's another confluence. You know, if you don't do that and you just trade one pair and you don't look at anything else, you're not really a trader, right? Well, not really a trader. I think you're limiting your view. Your view of the entire market is skewed, and to think that markets are not relevant, other markets not relevant. Everything's connected. It's the financial industry. Everything's connected. You know, gold is connected to the dollar. It correlates. It doesn't always correlate 100% of the time, though. Don't think everything's 100%. If you come into this business thinking that you're looking for perfection and 100%, and why is that going up when that's going down? Why doesn't that make sense? Why does that piece of news say that it's weak, but so that should go up, but it's going down? If you start asking silly questions like that, just whack yourself around the head, because you're chatting shit and you don't know what you're talking about and you're just overcomplicating it. Don't worry about it. Markets don't work that way. When they do and the stars are aligned and things do make sense, that'll fill you with some confluence and you think, yes, good, okay, I can make sense of this. Gold is going down while the stock markets are going up. There's correlation. Pound yen is moving in line, in sync with Wall Street, with the Dow Jones. Great, it's correlation. Yes, great. Okay, cool. We've got dollar pairs all moving up, or it's a yen move. They're all moving up or down the same. Great, it's correlation. You know, euro pound should be moving up when the pound dollar is moving down. Euro dollar should be going down when the dollar index or dollar related pairs are going up, like the dollar Swiss. They're highly correlated. You know, when you get that and you see it doesn't always work 100%, but there's high correlations. When it does do that, that's a confluence. That's a reason for you to get into the trade. So if you're going to trade a pair like dollar Swiss or if you're trading dollar Swiss, what's the euro dollar doing? Because it's its counterpart. If you're trading pound dollar, what's euro pound doing? If you're trading euro pound, what's pound dollar doing? If you're trading any dollar related pair, you know, what's the Dixie doing? You know, if you don't know what the Dixie is the dollar basket, dollar index. You know, I'll tell you what the dollar index is doing. It just reacted off the highs because it's been going up and up and up and up and up and up and up. And this was perfect. This had a 764. This had a really good bit of price action from the last high to the low and just retesting now, you know, end of the month. What do you think is going to happen now? I would say that this is a good place to start seeing some dollar coming off its highs. So is it going to do that? Are we going to see some weakness come in? Well, hardly weakness, but you know, at least a reaction, something. So I'm anticipating that. So what have I got on here? I've got a trend line on here. I have got my fibs on here. 38.2 is all the way down there, miles away. I'm anticipating any sort of correction. Is it going to get down there? I don't think it'll get down there tomorrow. But ask me, is it going to get down there? Yes, is the answer. When? That's You know, that's the $1 million question, isn't it? But do things just go up and down? Yeah, of course. So will that get down there? Yes. You know, understand the markets, the cycle. Things go up and down, and that's pretty much what they do, up and down, up and down. Look at a high time frame and it will keep you in check. Look at the weekly and the monthly. How many of you have checked your monthly charts over the last day or two? Because it's the end of the month, you know. Something as common sense as that. People sending me a 5-minute chart or a 30-minute chart, or at best it might be an hour chart, and I say, have you checked the high time frames? Oh yeah, no I haven't. I was like, what day is it? Friday. Oh, so have you checked your weekly? No, I haven't. Okay. Monthly? No. Well, you've got no chance. If you haven't checked the weekly, you've certainly not checked the monthly. Was it hard work to click these buttons? You know, don't you have 4-hour daily, weekly, monthly, yearly, quarterly? Don't you have any of those on your chart? No. Why not? Because I'm a scalper? What? Because you get in with a 2-pip stop? Yeah. And what? You know, so just sometimes it's common sense. Sometimes it's just you're lacking the most basic principles. So you need a routine. Get your routine sorted. Do the same thing every single day to the point where when you get to my level, you've been doing it for a number of years and you're just bored of it because it's the same thing every day. And it's like repetition. And repetition just doesn't matter what you're doing. Making money, you know, it's like, and yeah, don't be a slave to money, you know. Just, even that, the shine wears off. It's just the way we are as humans. So yeah, repetition. You need repetition. Try and be consistent. That's what consistency is, isn't it? Get the habits, routine, get it all sorted. Do the same thing every day. When you're doing it the same thing every day consistently for like 30 days, 60 days, 90 days, then you're going to start seeing the habits, good habits form. Then you're ready. Then you can start taking these challenges, start managing money. Until that point, you shouldn't go anywhere near an account. If you haven't even got a strategy, you know, touching money, yeah. And then if you try and kid yourself with, oh yeah, but you know, I paid for that as a lesson. It's cost me, I lost money there, but I've learnt a lesson. I'm like, shut up. I don't need to pay to lose money to learn. I can just learn for free. It's one of the few businesses, few industries, the few things that you can do in this world that will cost you, I don't know, nothing more than maybe a screen and internet. You know, charts, you can get free charts. So why are you paying for anything? If you're paying to level up your game, you know, some one-to-one stuff, mentoring with me, the only reason there's money because it means you're held accountable. It means you turn up on time. It means I'm not chasing you down. It means you want to get your money's worth. Because unfortunately, we're all to a certain degree a slave to money, and money seems to just dictate everything. And people live and die obsessed over money, and people kill for it. And you know, that's just the way of the world, unfortunately. And it's just I've been in this game for so long that it's just sad to see, really. You know, we weren't born on this world. We weren't born to make money. That wasn't supposed to be what our life is all about. But unfortunately, that's the way of society. And so I understand if you're coming into this business and you're chasing money, you're not going to make any. But if you're coming into this business to better your life, to have objectives, clear goals, and say, well, I want to quit my job because I work 5 days a week, 9 to 5. I do 8 hours, 10 hours a day. And I just feel like I'm working. I don't really get much enjoyment out of it. That's cool. That's justifiable. If you then come in and do an hour, 2 hours, the best traders, they work a couple of hours a day, do a trader day, job done. If you're doing more than that, 6 hours, 8 hours, you're over trading. Even if you're not taking a trade, you're probably over trading. Because if you're staring at charts, there's guaranteed to be a setup, and you'll take it, and you just end up taking too many trades. And if it doesn't work, you're just exposing yourself to the markets constantly. It's just not good. In terms of the dollar index, I think dollar index will come off the highs, go down. I think therefore gold, should we be selling gold? No, I think we've seen a bit of a move up. Let's have a look at gold. People keep asking me about gold. I thought I'd save it till the end. Set yourself some mini goals though. Work on on keeping a journal. How many of you have got a journal? Okay, ask you another question. How many of you use the journal? You've got it. Do you use it? I've seen some of you using it. It's great. Journal. It's just about keeping yourself in check, doing admin and you know. But do you use it as religiously as you should? Here's my journal. Because I said I'd set one up. I asked everybody last week before. So then I said, right, I'll keep a journal just to show you how basic it actually needs to be. Asset, pound yen, gold, Dow, 6 trades I've done. Didn't trade Monday, took a couple on Tuesday. What happened yesterday? Had a mini brain fart. What happened? I lost some money initially and then made it back. But why? Well, quite simple, really. No strategy. When all is said and done, did I follow my rules? No, I kind of just rushed in. Wasn't patient enough. There you go. I wasn't in the market for about half an hour. I hadn't turned the switch, flicked the switch. I was human for half an hour. Didn't actually like that feeling. Don't like feeling human. That was not good. You can't be human when you're trading. You've got to be like a machine. But yeah, just make some notes, comments. What did you do right? Do you need to put percentages on there? How much you made? It's up to you. Strategy. I like to know what strategy I'm using. It's very common. 764. Yeah, pretty much all of that this week. How many trades am I taking? That's important as well. I want to have maybe half a dozen trades a week. That's good. Maybe 20 trades a month roughly. That's good. If I'm doing 20 trades a day, that's not good. If I'm doing 10 trades a day, not good. If you're doing 10 trades a day, 7 trades a day, not good. I don't care if you're winning, not good. Why? Because you're not always going to win. And when you lose, you'll lose big and you'll just screw it all up and you'll be down 3-4% just like that. And you're like, and what's it down to? It's over trading. And it's very hard to see that sometimes. But humans are very destructive. We're top of the food chain, but what does that mean? It means we're top of the food chain of what? Animals. So we're top of the animal chain. We're still animals. If there was an alien species out there looking at the Earth, they look at us and think animals. We pretend to be civilized. Are we? We still fight. We still can't control our emotions. So there's certain things that you need to be very grounded, very humble. You make some money. That's fine. The money's the end byproduct. It's the end result. It's not what you're coming here to do. Do the process, learn the task, learn the craft, learn the skill, get good at it. Then you'll start making some money. So this was the 382 that I was talking about. Gold. 382 reaction, 1920 round number, 38.2. 2 confluences. Can we short? Let's see if we can put some fib extensions on. So we go from the highest pullback. So where's that? Here. Left to right. Left. Drag it down. So what does that do? That extends the fibs. There was a 764 at 1900. What did it do there? It stalled for a moment, reacted, but carried on going. Okay, interesting. Always like to see when price reacts at the 764. Because that's, when I tell you about the 3-step approach to trading, to my entry, I'm looking for the reaction. Fine, start putting some money on. But if it doesn't work, I want to get out. I want to move my stop to break even. Because if it does that and it blows through like it did there, and it did, didn't it? It blew through. So they're all done. All these fibs are no longer there. So we don't leave them on. We're not trading back to the 764. You're plotting fresh fibs. These are fresh fibs. So you go, again, left to right. In this case, bottom left. Right, what time frame is this? 1 hour. Momentum switches. There. MT strategy. Let's put a 382 on this range. MT strategy, 382. Where is that? Okay, there. Okay, it's trying to break. Yeah, it's faffing about, mate. It's spent all of yesterday just faffing at this level. But you're looking for it. It's thinking about it, isn't it? It's brewing, and then it broke, and we start getting that volume crossing over as well. So this is good. Momentum switching, MT strategy kicking in, break of the 382, off we go, and that's quite nice. So that's the MT strategy. That's the importance of the MT strategy. Use it, because no one ever talks about it. I don't use it to enter the trade. Most people will say, oh, I need to, on the break, on this move up, the break, I enter. No, you don't. Or if you're trying to short it, I put or something, you'll end up putting your stops or something at the 382. No, you don't put it on the fibs. You don't use them like that. You so just, yeah. If you're not sure, you want to ask me, send me a message, ask me a question. Yeah, I need to ask some questions now. Ask me some questions, because it's been a long session, and I don't blame you if you've left. But any questions? Someone asked me, state of mind when I enter. Well, that's it. Because we have a strategy, we follow the strategy. We're getting in at that right level, at these key levels, at the key time. 127 extension up here. There's a bit of resistance. I expect price to maybe react here. That's cool. Would I short this back down again? You could take this short to the 382 as a T1. It's not a 764 strategy. There's no strategy here though. It's just shorting off the 382 for a move back down off there, back to previous structure. So 1911 would be maybe a first target. 1911, 1912 as a pullback, but then it could go all the way. If it did manage to get down, I'd be looking at maybe a 764 pullback, something like that for a long. You could say, right, well, what about shorting it to there? Am I losing all the money? Yeah, it could do. So again, there's a few options, but just see what it depends on doing, and then we can decide. And I'm just thinking long, because dollar index is at the highs, and it might nudge up a little bit, the dollar index, but then it might sell off from there because it's at the highs. If that does, I'm looking for correlation, so some buying of gold maybe. See how that works. So overview of how you scalp the market. So because we get in at these key levels, I don't need to scalp. There's no scalping. If I do scalp, scalps are like 30-40 pips anyway. So it's not really a scalp, is it? There's no aggressive nature. Any more questions? Well, hopefully you found it useful. I know I've probably gone over everything a million times that you probably already know. But that's the thing about repetition. Eventually, some of it, you do it for long enough, it will start to make sense. When two different fibs align on each range, for example, which one to use? Well, yeah. So here we have a 127 extension with broke structure. So extended. We haven't got any divergence here. We've just had a beautiful clean bit of 1 hour volume. Again, as seen here as well on my 1 hour chart. And then a reaction around that 382, 120 area. So that's that. Short it down. Yeah, see what it does here. See what it does at this 1910, 1911. Yeah, I mean, you could have taken something off the top here and shorted it to there. I'm not saying that you can't and not to. That's, wait for the news. There must have been some news out at 1:30 now, for example, so it caused a little bit of a kick. Let's have a look at the 4 hour on gold. They are my targets, don't get me wrong. I just it's not a strategy, that's all. The strategy would have been to buy it up. The strategy would be now if it reacts here 382 to 382, that might be a little bit of a play. It's not a 764 strategy. That's all. All I'm saying, the probability is slightly less, so you can still take the trade. The setup's still there, it's still good. I think when you get to the point where you're consistently trading and making money, and you're just trading a 764 setup, you just learn to be a bit more patient. So it's discretionary now, isn't it? It's up to you. Take it, don't take it. But then look, this is what's happening. This is chop, 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 chop. Let's go down to a 15-minute. Okay, bouncing off that previous structure. So yeah, you could have shorted it to the previous structure. Do we have any divergence? Do we have any divergence? I don't want to see 5-minute divergence. I mean, that swaps and changes all the time. Momentum's trying to switch. We did have divergence on a 4 hour. One of my guys was talking about that, and said about it extending with divergence at the 50% of the bigger picture, so 50% down around 1870. I was trying to short it yesterday to 1870, and I was thinking, you know what? It's done a massive move from $2,000, and I'm looking at the last 20 pips, thinking it might just tap it, or 30 pips or so, and I'm thinking, well, yeah, maybe don't get so caught up with that. That's quite funny. Zoom out. Let's go. Let's go. Let's go. Let's go here. Da, 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 da. Yeah, the low on this trading view is wrong because the low wasn't 16. Where are you going? Where's it going? It's gone. Oh dear. Sorry, it's a bit laggy. The low isn't 1677. Let me show you. The low is 1667. Back in August last year, a lot of selling came in. Some hedge funds, they liquidated, they closed positions, they cashed out on gold. And it made that go hard, spike down. 1667. Sometimes you get discrepancy, you get, certain things are not accurate. Trading view is one of those, it's just not accurate sometimes. Even a dollar index. I'll show you the dollar index. My dollar index, the high, this previous high is, no, this one I think it is at 104, I think it is. One of these is like 103.92, 103.92 I think. And this one went up to, was it 103? There's about 100 pip difference. I don't see how, but then when I look at why and when and how, it's when there was some global event, something happened that caused sudden volatility. This is March, pandemic, spiked up. So sometimes discrepancies will occur, and it does throw things out a little, and it's perhaps not accurate. So it's important to have multiple charts. Use different time charts from different brokers, for example. Just cross-check everything, just see how things line up, because sometimes the highs and the lows will be different, maybe a few pips, but if they're like 100 pips different, that's no good. That's quite bad. Why not trade to the back to the 764? And what is the lowest time frame you would use as dependable force and oscillator divergence price action? 1 hour. 1 hour, 4 hour, daily, weekly, monthly. Yeah, 1 hour. Yeah, a bit choppy. Good though, nice move up, so expect it to pull back. After 382, yeah, it's doing that, isn't it? So your entry would have had to have been around as close to 1920 as possible. Let's have a look on my 4 hour. Let's see where we're at with my 4 hour. So I've got my pivots on my 4 hour. I'm already seeing the momentum cross over on the 4 hour. Awesome oscillator, momentum's crossing over. Again, slightly lagging on the 4 hour for trading view. Maybe with Oanda, maybe that's right. Maybe if it was a different provider, maybe FXCM or I don't know, another broker, maybe it is slightly different. But certainly here it's looking to cross over. That's why I need to cross check and use brokers like IG, use IC Trader, use MT4. I don't know, just use as many as you can, a few just to check. It's all about the detail, isn't it? But certainly we have divergence. If I just clear this up and show you divergence very quickly, final thing, and then we're done. Plotting fib extensions. People seem to struggle with this whole fib extension. So fib retracement, fib extension. So how do we get the fib extension? Let's maybe go on a 1 hour. This is making a move down. We've already gone sold off, and it does a little pullback. So you get that high and that low of that range. It's almost like a wave 4 consolidation, then a wave 5 finishes, and then it goes into an A, B, C correction. So maybe this will come back down to like a 38.2 and then go up like A, B, C. So A, B, C, for example, it might do that. Elliott wave. There's a couple of different ways to read the Elliott wave. But yeah, fib extensions. You see when I plotted it, these ones are no longer valid. Remove them. Get them out from there because they just confuse you. You think you're going to trade back to the 764. No, you don't trade back to it like that. You don't trade back to the 382 like that, so to speak. So extensions, divergence. Yeah, 1 hour divergence. It's going down. The volume's not there. It's going to stall. You expect it to stall around 1880, and then maybe it's going to go up from there. Stab down slightly. Great. What about the 4 hour? Did it? 4 hour divergence. We had 1 hour divergence, 4 hour divergence. That's cool. 2 high time frames, 2 confluences. Great reversal. Good reversal candle there on the trading view. I think they do it like 6 o'clock, 10 o'clock. Again, the time zone is, I don't know what the time zone is meant to be, because it says 1:37 London time. That's right, but the 4 hour candles, I don't know, maybe I need to change the settings, but I don't operate it on a 6, 10, 2. I operate on a 12 o'clock. I use London Greenwich Mean Time, because that tends to be the starting point for global clocks around the world. So New York's -5 hours that way, you know. Australia, currently Sydney's, is currently 9 hours that way, you know. It's so yeah. Weird. So when I look at these candles, 8 o'clock, 12 o'clock, 4 o'clock, 8 o'clock, 12 o'clock, you know, it's normal. So again, slight difference. So maybe it will give us a slightly different view because there's a 2 hour difference. But yeah, there you go. So there's that breaking over. I'm seeing it sell off. How many of you are watching gold and panicking and feeling all emotional? How many of you are even taking trades on gold and shorting it and getting involved in it and, you know, very reactive to the price action? FOMO, fear of missing out. I'm sitting here, I haven't got any accounts open. I'm sitting here looking at it, going, okay, cool. What's for dinner? You know, what's for lunch? You know, that's where you need to work on the 80-20. Work on yourself. If you're seeing this go down and you're shitting yourself or you're reacting, so I shouldn't swear, and you're sort of, oh my God, it's like you need to calm down. You need to get a grip of yourself, get a hold of yourself. It's a never-ending buffet. There's opportunities all day, every day. The best traders, remember when I reeled off the stats from one of these prop firms? Like thousands of people taking a prop firm challenge. Only 5 out of thousands, maybe 5,000 people, only 5 are actually consistent. You know, making between 4 to 8% a month. When they get to 4 to 8%, they stop, wait for their next payout, and then start again. They trade for maybe anything up to like 4 hours a day. They're done. So they do a session. Done. Done. Cool. So you shorted at 1990 from 1919. Lovely. What's your stop? What's your target? What's your risk? Be honest. Be honest. Be transparent. Are you still in the trade? Did you manage the risk? I mean, were you religious enough with the whole risk? You know, what I mean is, were you obsessed with it? Did you say, right, I'm doing 0.5% and calculate it, 0.5%, 1%? What did you risk? Where's the stop loss? What's your T1? What's your T2? Have you done all that? Is it all done? Are you happy with it? Yeah, that's how you have to be as a trader: mechanical, emotionless, and with sort of real military precision in how you execute this trade, how you get in. If you're all a little bit loose around the edges with all of that, so well, I haven't even put my stop in yet. You know, it's like, well, then of course that's where you need to work. That's where your work starts, right? You can ask me a million questions, but if you haven't got the basics, then work on that. Yeah, only 5 people on their 8th payout. The rest all burned. Exactly, nice way to put it. So consistency. So you look at those 5 people and you start asking them, if you could, you know, or look at the numbers. The stats don't lie. What is it that they are doing? What is it that they're doing that differs to what you're doing? Why do they have the edge? Why is it that you've already blown your account? Maybe you got to pass and got 1 payout, and that's as good as it gets. Why is that then? What was it that went wrong? And don't be soft on yourself. That's when you need to be hard on yourself, because you'll be like, okay, what did I do wrong? What do I need to do right? When am I going to start doing it the right way? If there's a few things I'm not happy with, you know, why haven't I changed it? Why is it? I know where I need to improve. Why am I not making an improvement? What am I waiting for? Why is my mind saying I should do it, but then there's like the voice of reason and you've got the angel on one shoulder and the devil on the other. Why are you having this battle in your head? What's stopping you, preventing you from making the right decisions when you know the process and you know what you're supposed to do? Why aren't you doing it? At what point are you going to do it? I'll tell you when you're going to do it. You're going to do it not after you've had a million losses. Yeah, you might, but that's not because that doesn't suddenly give you the momentum to do it. That says, right, I need to make a change. When you do it is when you stop trading. Stop over trading. When you stop and you just say, right, I need to just look at the process, follow the rules. Let's make sure I've got this process nailed and I understand it and it's all accurate. Let me make sure I'm happy with everything. Have I, contingency? Have I got everything? Have I checked everything? Have I double checked everything? Am I happy with what? Am I going in to this fight with ammunition? Oh shit! I forgot the ammo. Gun's got no ammo. It's almost what you're doing. So I can't wait to get out this plane and jump and do a skydive. Don't forget the parachute, mate. It's just slow down. You're not 3 years old. You're not a child. Stop acting like a puppy chasing everything. This is you. You're in control. You are in control. Believe it or not, you are in control. The markets are not telling you what to do. They are showing you the way. All you have to do is kind of just follow and learn how to follow. And so that means park your ego. And if things are not quite right still, you need to fix those things before you get back. Before you get back in the ring, yeah, you're like a fly looking at the blue light, and you're going to get closer to that blue light, and then you're just going to get fried. It's going to fry your ass. You're going to get electrocuted, and it's just so you need to kind of pull yourself out of this trance, these bad habits. So that's what I'm here for, to connect the dots, to fill in the blanks, to help you with that. So good job. So you're shorting there, so you closed half at 19.15. So let's see what you've done. Let's put the fibs on. Moment of truth. And you're probably just telling me what I want to hear anyway. Do I believe that you've actually done this, that you did actually get in at 1919, exactly 1919? Probably did get in at 1919. With what kind of risk? And so yeah, okay, so straight away, I'll tell you one thing that you've done that you could have done, should have done, could have done better. 1919 goes down to 1915, and then you closed at 1915. Why did you close at 1915? What's at 1915 that made you panic? If it's at the 382 and it's reacting, at least just move your stop loss to break even. Let it run. A runner on break even for around 1900. So what's at 1900? See, you are trading okay, it's fine, but your targeting is okay as well. 1900, 382, that's good. So why would you take some off at 15? Is that just to make you feel better? Is that to kind of just make you feel calm? Did you move your stop to break even? Yeah, you did. So you moved your stop to break even, you took about 40 pips off, and you felt calm. Okay, that's cool. So your process is okay, it's good. Let's improve that. Let's not take it all off at 15. If we open another couple of positions, 2-3 positions running, let's maybe take some off there, just to, at the same time you want to move your stop loss, just to make yourself feel better. If that's going to help ease your emotions, if you're feeling quite twitchy and nervous and restless and uncomfortable. It's an emotional business, and if you're struggling there, okay, I get it. But let's focus on the bigger picture. It's not T1. It's not 1901. Well, it is, but it's not. Let's talk about this one. Let's talk about the 764. Let's talk about 1883 and a half, roughly. Round it up to 1885. Let's talk about that as the real target. I set a T1 and a T2. When I work out my risk, I'm not working it off a T1. I'm not working it off the fact that I'm going to scalp for 40 pips. It's none of that. My target that I work everything off, the numbers, is based on my T2. My T2 is the final destination. That is my target, though. Everything else that I've put in place in the middle is just measures that I take to help me deal with my emotions, that help me deal with the process. Nothing will move in a straight line necessarily, but if it does, great. It's great when it does. But yeah. So I want to pay myself when it gets down here. If it gets down to 1900, that's lovely. I think, you know, could finish at 1900 for the, just sit around here maybe for the rest of the day. Get down there and then bounce back up again maybe as we enter the US session. That might work. Let's see, you know, see what happens. See what happens. So let's drill down. Let's drill down more. Let's drill down into like a 5-minute chart. Let's really look at trailing the stop loss if that's the case. So okay. You're looking for 1900, but I'm looking for 1883. I'll be generous, 1885. Let me go back to 764 here. Look, the reason that we are looking at 76.4 is because most people, some traders will do this, and I see this often as well. You'll do this. You'll just go right. It went up, and so then we're going to short it to go all the way back down like a complete and end shape, and you know, there's an issue there in terms of probability. What's the chances of this going full circle down to retest that low? Well, at this stage, it's quite high. It's a low probability. So what am I trying to do to help myself deal with snatching profits too soon and not wanting to just snatch on any little move like this as a scalp move? Well, I'm going to say, okay, I am going to give up. I'm not going to take my full 100% share of this move. I'm going to leave just over 20%. I'm going to leave 23.4% on the table, to be precise. Maybe a little bit more. I'm going to leave just over 20%, a fifth of this move. I'm going to leave it on the table. So I want to, you know, target in 1885. That's my target for gold, 1885. As far as I'm concerned, I've already just left this much on the table. This is all this extra reward that I'm not taking. So if I'm talking about snatching profit, there, I've already given some back. You know, we're doing a deal. I'm doing a deal with the market here. I'm haggling for the best price. I'm haggling for the, you know, best value. So the last thing I want to do, I don't want to do that, do I? I'm selling myself short here. That's not a deal. Do you know how to haggle? Do you know how to get the best bargains when you go shopping, looking for the best deal? That's not the best deal. That's a pretty good deal. That's a great deal. You know, think of it. Use real life analogy, real life examples. Visualize what it is you're actually doing. Because the processes, life processes, daily processes, human behavior, it's all linked. It's the same stuff, just in a different scenario. We do the same stuff every day. So how you are as a character is going to influence the way you trade. You know, are you a nervous person? Do you have a nervous disposition? You know, are you shy, an introvert, extrovert? Understand who you are. What are your strengths and weaknesses? Understand what makes you tick. Work on that 80%. Work on it. Are you autistic? Do you have autistic tendencies? Asperger's? Do you have some form of, you know, any little things that might help? It might be beneficial. You know, it might not. It just depends. But understand who you are. I know who I am. I know who I am. I've accepted who I am as well. That's the next stage, acceptance. Accept all your flaws in all their glory. Accept your strengths as well. Recognise who you are. Love and embrace who you are. Then you'll do this job, and you'll get on, and you'll enjoy it, and you'll find you'll be at peace. Except if you don't know who you are because you're 20 years old, then I understand, you know, you're young, you're still trying to discover what makes you tick. And your emotions are different, your hormones are different, everything's different, your impulsiveness is different. Yeah, it's just different, isn't it? Prefrontal cortex. Understand that as well. So again, 80% self-development. Do the homework. You know, go make sure. Even the older ones of you out there, 30, 40 years old, and what? Do you know who you are? Because you know what you're bringing. You're bringing, like I said to you at the very beginning, you're bringing baggage. And it's going to affect every decision you make. And it's just, that's the problem. And again, people think that, you know, if you think that you're not meant to have problems in this world, or meant to have problems, then there lies the problem in itself. You know, again, you're not the centre of the universe. The world, the universe, it doesn't revolve around you. We all die. We can't take any of this with us. You know, you can leave a legacy, but that's just more a case of leaving a legacy because maybe you have loved ones. You have next generation, your children. You want to leave something for them maybe. That's just being nice. That's just being respectful. That's just being courteous. You know, your loved ones, great. Leaving a legacy. You know, maybe that's a little bit of ego. That's cool. Whatever. But understand what you're doing, why you're here, what you want to achieve. Set yourself some goals. Write yourself a goal here. I want to buy a house. I want to be debt free. I want to have no mortgage on a nice property. Write it at the top of your piece of paper. Then make mini lists. You know, like the fibs. These are the pit stops. You know, write down points, mini objectives, mini goals to get there. Rome wasn't built in a day. You're not going to get there in a day. You know, it might take you 5 years. It might take you 10 years. In my case, it might take me 20 years. You know, that's okay. I had nothing else better to do. So, and I'm still here. Nothing else better to do. But I'm taking a holiday in July. That's what I'm working towards. I can envisage right now turquoise waters. It's warm and there's sunshine and there's a hammock and there's me in my shorts and t-shirt and my flip-flops, and I might get a scooter and scoot around and swing on the hammock and read some books, listen to some podcasts, and doesn't sound very exciting, does it? You know, I'm not going to be buying a Lamborghini. I'm going to be sitting on a hammock. I don't need to look rich. I don't need to look wealthy to be wealthy. You don't need to be. Wealth is different for everyone. It does not how much money you have in your bank account. That's not wealth. It's a form of wealth. So just be clear on, all of this matters. It does matter. It makes a difference. It really does. You know it does as well. That's why you're here. This job makes you look at yourself in the mirror. Real good, hard look at yourself. Stay humble. Be humble. That will help. But understand you're not going to like sometimes. You're not going to like what you see, and you've got to try and fix that, and just keep working on it. It's a process. You'll probably be working on it until the day you die, but that's part of the journey, I guess, journey of life. And so there's a lot of correlation with trading and what you do in your life, because a lot of your qualities that you get from this job might spill over into your day job, into your life, into how you are as a person. That's cool. Then you might actually like who you see in the mirror. Anyway, there you go. I'm done. See you guys later. Have a nice day. Thanks for joining us. Thanks for listening to me talk for 2 hours. Oh, mad. Right, gotta go. Definitely. Nice talking to you guys. Take care. All the best. Bye.